I recently had a video talking about GameStop, AMC, Bed Bath and Beyond, BlackBerry. Now you can check out that video if you follow this link here. Now the thing that these stocks all have in common is that they are heavily shorted. I thought we should have a video talking about what shorting a stock is. And in general, when you think a stock is going to decline in value, you think it's overpriced or it's going to decline in value for whatever reason, you could short it and make money off of that type of an investment. What are we talking about here? Basically, again, you think a stock's going to go down, but you don't own that stock. So what you do is you out there and you borrow it from someone. There is a cost associated with borrowing it from them. You go to the market, you sell it. You can then invest those proceeds in whatever you want. You hope the stock declines in value. You buy it back for less money than you got when you sold it. You return the shares to the owner and you have that little profit there. Now, of course, in this chart, just as step 3, the stock loses value. Of course, reality is stocks can go up and down. This is a diagram kind of showing you what happens to your profits at different stock prices. And this does ignore borrowing costs, so this will be shifted down by the cost of the borrow. But you can quickly see here that you have some upside when the stock price does decline, but as it goes up, and it can go up forever, this chart could go on forever, your losses become at some point more than your initial investment. So this is a very risky strategy. There's no top to the upside of stock prices, which means there's no bottom to the amount of losses you could suffer. Now, there's something also called a naked short. This is not legal. There are still people doing it. There's some loopholes and ways people can get around this. But basically here is you're actually shorting a stock that you don't have, right? So it's not affirmatively determined that that stock exists for you to sell. You don't actually possess it. You haven't demonstrated that you have the ability to possess it or whatnot, but there's something called naked short. It's supposed to be illegal, but it does happen occasionally now. There is something called short sell against the box. And this is when you actually have the stock and you want to sell it, but you don't want to sell it because you don't want to take on those tax liabilities. So then you short a stock that you own, effectively kind of netting out your position. Of course, you still have to pay those borrowing costs, but you don't have to realize those tax gains if you do this. And of course, the thing is, in general, the market goes up, but it doesn't always go up. So people would do this if we're in a bear market and you want to make some money, you could do this, pull out completely, or you could say, I'm going to short the market, so I'm going to actually gain as the market loses. You might want to hedge the exact same stock, like in the previous example, or maybe you have a position, you're a hedge fund manager, you have a position that's very similar, so you're hedging it just to get that idiosyncratic return, or you just have particular knowledge about a particular stock or a particular view, and you think, hey, this particular stock is going to go down. But those are the kind of the general reasons why people do this. Now, advocates of short selling say it leads to better price discovery. During the financial crisis, there were several shorting bans. There's some papers out there, 2 of them listed here, that pretty much say the shorting bans didn't really do anything. The bans were there to kind of protect the market from falling, but that didn't actually work. Stocks that were banned actually did worse than stocks that weren't. Price discovery suffered a little bit. So in general, it seems like having this ability in the market does make for better markets. I should also mention that there's probably safer options. If you think the stock is going to go down, you could buy a put option and you wouldn't have this danger of the stock going through the roof and you kind of losing everything. Now I have some videos about options. You can check out those videos here. Ultimately, that's kind of what a short is. Next time we'll talk about a short squeeze, because that really is kind of what prompted me to think about this and having a video like this. Thanks so much for listening.